Welcome to this episode of Auction Watch, the show where we deep dive into what's happening in the wonderful world of auctions. In today's episode, we're going to have a look at a brewery in Ipswich. Let's see whether we can organise more than a piss up there. And a multi-let office building in Birmingham. Now, as usual, I'm joined by our auction supremos, Piotr Rusinek, Rod Turner and Jay Howard. So before we get on to our lots this time round, if you haven't already done so, make sure you subscribe and hit the bell icon. You know, I was offended when I looked at the YouTube statistics the other day. 60% of you watching this are not subscribers. I don't know why not. Subscribe, hit the bell icon, you'll get notified as soon as we upload. And be sure to catch up some of our previous episodes of Auction Watch on the playlist. The link is in the description below. Before we get going, we're filming this in November 2021, and one of the things that we always say is that the auction market is a real barometer of what's happening in the wider property market. So if you're looking for signs of change in the property market, look first to what's happening in the auction scene, because that gives you the first indicators. So I'm here with the guys, Jay, Piotr, Rod. Jay, Piotr, you do a lot of auction trading. What are you seeing right now? Are you seeing any signs of any movement?
Definitely signs of movement. I did
subsidence, or
definitely. Well, there's a lovely property in Reading that's got a phenomenal amount of subsidence, but no, there's been a big kind of correction at the moment that we're seeing. I did an article for Property Investor News magazine, and literally the auctions since September had such a massive change, not only in the prices achieved for the property, but the success rates. And you're seeing that kind of also filter through into October. Of course, you're going to find the odd property where someone's bought something on a 3% yield and you can't figure out why they did it. But there's always a reason why. But the majority of things, there are so many more deals. We're now looking at things that we're going to be bidding on, and we're thinking, well, this is just going to absolutely fly. And we're making offers post-auction because it didn't sell. We're actually bidding on something today. And you know, our price is at least 60 grand above what the guide was, and we are likely to get it far below what we're willing to pay for it. And that's just a sign of how things are subtly moving. Now, that may be coming towards the end of furlough, it may be the stamp duty holiday coming to an end, it may be the recent budget update. Whatever it is, there is a real tangible change in the auction market.
Yeah, and I think the key thing right now is if someone is selling properties in auction, like to choose the right auction house, it's more important than ever, because unless the auction house has got a good database of regular clients, it will be very difficult to sell things through like a random auction house, because not everyone is going crazy like on everything for everything on Rightmove. So I think it's even more important to choose the auctioneers rightly for the properties.
Rod, how much of this do you think is seasonal? Because I've always had a lot of fun with auctions in November and December.
Yeah, December's always been the month where traditionally you can pick up a deal at auction because everyone else is, I don't know, at the Christmas party and things like that. I do think there's been a big change in terms of everyone getting back into the office, and where auctions traditionally have been in the room. We've had, I don't know, almost 2 years now of them being online, and now I think there's a bit of a change for people that are bidding, whereas they might be back in their office. It's not maybe as easy for them to get back into the room, or sometimes they're just plainly forgetting to get there. And I think what Piotr's just said about making sure that your lot is in or what you're selling is in the right auction is massive, and that's one of the biggest kind of indicators that you might get a good deal, is where you see something that, I don't know, could be a residential property being sold in all sorts commercial, is where you see something like that doesn't quite fit. That's where I think there's often a really good deal to be had.
Some of the first signs I saw of this, it was a few weeks ago, I started to get emails from the auction houses, and they were saying guide price reductions. You know, earlier this year, last year, who saw guide price reductions? You know, now you get about 10 of them come through in one catalogue.
There was the Allsop one where they did an update email, and there was about 30, 40 price drops in that catalogue, and that was the September auction.
Wow.
Which traditionally, you know, February auction is like a highlight auction of the year. Most auctioneers do very well in February. It sets the tone for the year. then you have your midsummer auction, and then you have September, which is everyone comes back from holidays or doing whatever, and they're like, right, I've been on holiday, let me buy something.
Well, what was slightly different about this September is people had gone back to school, and what we found was it took until kind of the second week of September for everything to start getting going again. Even from a lettings point of view, you start to see actually that start coming up, and like you say, auctions are what spare room is for the lettings to sales, because they're the most transient tenants. They move first, so that's where you get to see, and that's what we're seeing at auctions, because it's the quicker purchase, the faster transactions. So
I think December's going to be really very interesting, because you still have a bit of a government hiatus on lenders looking to repossess and sell properties over Christmas. So there's a lot of government kind of interference there to not make people homeless, you know, from December 12th to January 12th or whatever the date is. And I think that's going to change the DNA of the kind of standard stock you'd be looking to find in a December catalogue.
Also, with a lot of the commercials that we'll probably be looking at today, I think what you're finding is landlords are now, in the same way that landowners, it takes them time to kind of get their head around what the market's doing and accept prices. I think that's what's happening a lot with a lot of these commercial landlords as well now. They're now going, okay, I'm accepting that this property might not be worth as much as I thought, and that's where you're starting to find.
There's a lot of, you're absolutely right, there's a lot of seasonality, there's a lot of trends coming to bear right now. There's a lot of oversupply, particularly of commercial properties, which is driving prices. Well, I think what's happening now is prices are coming off the boil. There was a lot of exuberance in the early part of this year, people pushing the boat out with prices, and now they're having to peg those back.
One thing we've got to remember as well is there's two factors from a development point of view. One, in terms of price of labour and materials. Yes. People are now suddenly realising, well, I would have bought this 2 years ago and developed it out, but now I'm not willing to do that because I don't know, one, what my price of materials and labour is going to be. But the other big factor is, has anyone tried to get anything through planning recently? Some of these councils are an absolute nightmare. Croydon's taking 9 months to even validate an application. We're factoring in 2 years for anything that's sort of beyond the rear extension of a residential. So I think developers are starting to be very, very cautious about what they're buying as well for those two reasons.
Yes, I mean, planning has always been a pain, and it's one of the reasons I'm a big advocate of permitted development, of course, 56 days and you're through. So I think for you guys watching this, you need to binge watch this. You need to like, subscribe to this channel and binge watch the previous episodes of Auction Watch, because I think there's going to be, I don't think in the last 2 years there's been such a buying opportunity from auctions as is opening up over the next few months. Anyone disagree?
I think only 1 month, the month of lockdowns, when the lockdowns first happened, everyone's so scared. That was the month that the deals were there, but now it's back.
But they're not back in the room, are they? We still have to do this click and mouse stuff, you know, we can't meet up.
There's one, and like there's that one auction, I saw the pictures from that auction, it was like 6 people in the room. This massive, gigantic, everyone still bids online.
Grand rooms in London, £20,000 a day, and there are 6 people.
And everyone loves bidding online. People like really accepted
comfort.
That.
Yeah, but so it's the death of bidding off the chandelier, is it? Or the online equivalent. Anyway, enough of this chit chat. Let's get on and have a look at this episode's 2 lots. We're off to
first. Ipswich.
Ipswich first, and this is a brewery. So what sort of piss up can we organise there? We'll get back to the video in just a moment, but what I wanted to really tell you about was what is the most exciting opportunity in property right now, and that is repurposing defunct commercial buildings to residential use. Now, most people don't really know where to start, what to look for, and how to exploit these opportunities, and that's why I've prepared 90 minutes of free training for you to get you started on this wonderful journey. You can register for this free training at property-workshop.com. Join me on that free training, and I'll leave you to enjoy the rest of the video.
So this is Rod's pick. So Rod, do you want to kick us off on this one?
So this is lot 73 of the Savills auction. It's former Tolly Cobbled Brewery site in Ipswich. It's a monster of a site. It's 1.8 acres right on the water. It's made up of an old brewery, a detached house, I think a detached pub as well. It's got a very, very large car park too. It's previously had planning permission granted along with the next door site for I think it's around 220 residential units and mixed use commercial on the ground floor. So it's clearly part of a regeneration site in Ipswich. There's a few things to kind of consider. One, what are you buying here? It's empty. The only thing that's income producing is a car park let on just under £8,000 a year. Obviously, there's a huge amount of work that needs to go into it. It's grade 2 listed, so that's going to cause issues for what you're doing in terms of the conversion. But you are buying an awful lot of floor space for the amount. So you're buying £130 a square metre. So if you to put that into context, if anyone's trying to build something equivalent next door, that's a huge barrier to entry to competition, which is an interesting point. And from a residential point of view, things in that area are selling around £3,000 per square metre. So if you can, I don't know, let's say you were going to convert the site and not add any size to it and just convert it to residential, if you can keep those build costs under £2,000 a square metre, you're still making about £870 a square metre profit, which is pretty healthy. That's kind of around 3 million. Obviously, there's going to be issues around kind of communal parts and things like that. But I do think that's interesting. I think the car parks, another really good point there. There's a huge amount of space for parking, and with parking, there's other things that can happen there. I mean, you've got last mile logistics stuff, we've got dark kitchens, all these other ways that you can get income producing from a car park. And also, it's a fabulous building. It's an amazing building, which really draws people's eye to it. But that can be a poison chalice, really, because what you don't want to do is to get something like this and end up forking out a huge amount on heritage consultants and building works trying to keep up with whatever is listed within that building. So that's something definitely to be careful of. The good thing is the precedent was set in 2019 when planning was granted. So yeah, it caught my eye. It's something I think is very interesting. It's guided at 500 grand. So yeah, I'll be interested to see what you guys think in terms of opportunities and traps.
So I looked at this. I looked at because I didn't do the quick math in my head about the pound per square metre, but I saw X amount of square foot, and I saw £500,000. I thought, well, this is Ipswich. Like there's decent capital value in. It's close to the town centre. It's on the water, as Ranjan said earlier on. I would be minded if and I certainly wouldn't do this deal for fairly obvious reasons for people that know me. But I would just do the conversion of what's there. And if at a later stage there was potential to extend or do something like that, I would look at that. But the barriers to entry on this is the fact that it's in auction. Because any serious developer that's looking at this is going to be wanting to get the reports from Homes England and the reports from so-and-so. And I don't see that. I don't see any of those reports finding their way into the legal pack. I
think you're absolutely right. If you're going to be buying this, you're going to be sitting on it for a while whilst you go through the planning issues. So you're going to have some capital there. What I would be looking at are exploring where you can receive grants for bringing this back, looking at how you can, it's clearly a site designated for regeneration. So I'd be looking at the council and what they can provide in terms of that as well. If you look at the planning permission that was granted, it's together with the next door. So is there something that can still happen with next door or not? You'd need to obviously speak to them. There's some interesting stuff what they want to put on. They want to put a museum in one of the units on the ground floor. Again, which is another interesting one. So I think there's an awful lot of scope, but it's going to take someone who's got a decent amount of capital that they're happy to tie up for a while whilst you go through. But certainly.
I also think, like, even if you got the site for free, the amount of capital you need to put to start the process of just like even like measuring the site, like just having a measured survey for this property must be like £20,000. Yeah, so I'm just put off just by that alone.
I think this is one of these sites which auctions are great for, because this is going to go to a niche player who's experienced with doing grade 2 listed buildings and has the people in their power team to get the adequate reports and all of that, and goes into this with their eyes wide open. The interesting thing is the differential between the what you're buying per square foot and the end values. And as long as you rightly say, as long as there's enough in there to make the extra cost of dealing with the grade 2 stuff worthwhile. But if you're knowledgeable on it, because I know a few people that are grade 2 experts, that's all they do. I see it as hassle because I don't do it. So I've got to learn everything from scratch. So if you've got the knowledge and you've got the teams in place, you're going to shortcut your way through this. But the other thing I do see is that if you convert this to flats and you sell them on in the open market, how attractive would that be? Because those are going to be laden with such high service charges.
There's an interesting thing to put in here, in that the flat market we've seen throughout the UK has not had a great time over the past 2 years. However, if you go on and look at what flats are on the market within a half-mile radius of this property, it's 67% are sold that are on the market are sold subject to contract, which is massive. That's a massive demand for 1 and 2 bed flats, which gave me real confidence on that, because absolutely great point. You would be worried about what are those service charges going to be, but don't forget, it's unlikely you'll be a purely residential site. There'll be commercial elements too. I think there's, on the previous planning, there was a gym, a health club, a museum, a coffee shop, and
this reminds me a little bit of a King's Cross. It's like King's Cross, like 20 years ago, was like a really bad place, right? But when all those buildings started to grow,
it's the old Docklands, isn't it? Yeah, looking at.
Well, listen, if I could knock the thing down, I might be more interested. I don't want to keep that building.
Is the most appropriate buyer for this the neighbouring landowner who's conjoined in that planning?
Well, there's a reason why they haven't gone and built out.
And they probably have been offered that before, because it was offered with an agent that deals with the hospitality type thing. So
I'm sure you've encountered situations before where vendors may have a buyer that's expressed an interest, but they put it in the auction purely to entice someone else and get the keenest price.
If you know you've got 1 or 2 people and they're dragging their feet and it's going round the merry-go-round and no one's getting anywhere they want to get to, putting it into auction is basically saying it's one of you are going to buy it.
Someone's buying
One of you is going to buy it.
I would expect whoever gets this will not start building work for minimum 18 months, but I'd expect it to be probably 2 to 3 years just before they start. So you've got to be prepared to tie up a huge amount of capital there. But for the right person, I think it's going to be great.
Any of us the right person for this?
No. I would go as far as to say I don't think this will sell in the auction. I think this will be sold post-auction. And I think when it sells post-auction, it will be subject to condition X, Y, and Z, because anyone who is £500,000 is not a massive barrier to entry for developers, but anyone who understands how a building like this needs to work understands that an unconditional sale is not sufficient for this asset.
I think the big problem is it's grade 2 listed. You can't knock it down, so you're just constrained with what you can and can't do.
And it's also fire damaged, so you probably need to repair some of the
But
stuff.
no business rates, probably.
That's almost the fire damage could be a positive, to be honest.
Okay, so maybe not quite a deal for us. Let us know whether it's a deal for you. Enter your comments down below. And if you're enjoying this, it helps us out on YouTube, and subscribe. Hit the bell icon, you'll be notified when we next upload the next video. So next we're off to Birmingham for an office building near the airport, lot number 15 in Acuitas catalogue. This is one of my picks, so let's have a look at it. So we've got a multi-layer office building next door to what was the original building, which is a little bit more beautiful. As you can see, when you've got a flat roof on an office building, there's some potential there, perhaps some rooftop development going on. But the big issue, I guess, with what you can do with the building is dependent on whether it's occupied. Of course, we've got permitted development that allows you to convert offices to residential. This would be a ripe area for that. But to qualify, the building has to be vacant for 3 months before you can put that permitted development application. And as you can see from the screen, this has a few commercial tenants because it's a bit of a mixed use building in terms of multiple tenancies. Now, some of these tenancies are outside of the 1954 Commercial Tenancies Act. Some of them are inside the Act. Now, what that means is if they are inside the 1954 Act, then basically at the end of the lease, they have a right to be offered a renewal lease on the same terms as their previous lease, but at the revised rent. If they're outside of the Act, then you can bring those tenancies to an end. So we have an interesting building in a fantastic location, lots of potential, but a mixed bag of occupation. What do we think?
I am concerned by this one. I'm concerned by the lease, which offers no income. We should add it's at peppercorn rent.
Let's have a
So
look at
that's
that
the
one.
one.
Yep.
That's the one with British Telecom.
Yeah, with British Telecom. So, and they're taking up an awful lot of the space there. I'm also concerned about the other tenants in there. If you want to keep it as offices, you've got quite a lot paying, not a huge amount in terms of rent. What does that include? Does it include their bills and servicing costs? I would imagine it does because of the way it's laid out. So we know what's going on with energy prices at the moment and things like that. What's going to be our net rent after all these costs of actually operating and managing a serviced office building, which is what this really is?
This is not quite a serviced office, so it's multi-let, but because they're on longer leases, it's levied by a service charge.
They'll proportion the service charge.
Exactly. So if the utilities go up, they'll all pay a proportion.
They'll pay, But that's going to scare them off because why would you be in a 400 square foot office on Haslops Green Road when you could be at the local office group or WeWork for probably a bit less, which incorporates everything. So who are the tenants that this is going to attract is almost my issue, really. And then if you're going to develop it out, I mean, like you said, you've got other issues there where you're being held to ransom slightly. It's also leasehold. You do have the opportunity of the option of buying the freehold for £1. It was previously owned by British Telecoms, who's now the leaseholder on Peppercorn, which leads me to believe that because they've been there so long, why would they leave? I've definitely some concerns about it. For someone that knows the building and is in discussions with maybe BT there, and they might know something that we don't, i.e. they might want to go, or they might have another building for them down the road that's even better. That could be an option. So I think this needs someone with a bit of inside knowledge. Really.
It's interesting that option to buy the freehold has been offered, but no one's taken it up.
Mm-hmm.
I mean, why not? I mean, we can have a rip round right now and exercise that option for £1.
The only thing I would say is just because you can't develop it, I don't know, to residential, there's nothing stopping you from going into planning and putting something on the roof there, whether it's another floor. You could get something in there. It could be, you could make it really cool and put it, I don't know, a roof terrace and a bar up there for all your offices. And that's the sort of thing now that people
becomes
are
more
going to...
experiential,
Exactly. So there's certainly opportunity with it. It's just, I'm not sure whether it's worth it.
I would say this one is it could work really well if BT leaves in 2024, which the likelihood of that is less than 50%, I think. They're probably going to stay. And as you can see on the picture there, it's like this side is like at the end of this massive development, and it would suit a nice block of flats, but you need BT out. And they're probably going to renew their lease because their renewal is, they've got an option as well to renew the lease on a peppercorn rent without any premium. So it's just basically nod of the hat, and they can have another 25 years. So that's a big risk. And if someone is keeping it for long term, I would say the opportunity to increase the income with possibly putting like the telecom masts or things like this, but you need to get the freehold first.
I think with the BT thing, the way you would value this building is pretty much you value it assuming you don't have the BT space.
Yeah.
But BT are in there for a peppercorn rent, but they are paying a proportion of the service charge. So they are paying and quite a big one. So that's good.
Yeah.
So then it's really about the other. So if you actually took this building and said, okay, forget about the BT bit, take that out of the equation. We've got the other space, and you've got the other tenants in there. I think that what people should try to do at auctions is get value. And I think some of the best value at auctions is found when you go outside the legal pack. So some of the best deals I've got is where there is an incumbent tenant. So you don't have the information in the legal pack, but you go and speak to them, and you find out their intentions, and you find out whether they're keen to stay. I mean, it's got some solicitors in there and mortgage companies in there who are occupants in there. If you speak to them, you'll probably find that 10 of their guys have been working at home, and they only need a smaller office, but they're stuck in the contract. So this is going to go to a player who will actually say, forget about the BT, they're in there, take that off the price, let's see who else is in there, and what can we do to get that vacant occupation.
It might be suited to an occupier as well. If you've got someone there who's looking for a specific occupier, you might get some of these smaller boutique serviced office companies that want to go, okay, we'll go and take it on. It's also owned in an SPV, so again, obviously doing due diligence on the company could save a bit of stamp duty there, but might incur a few more legal costs. So it really depends how that's been run. But yeah, it's like you say, there's value to be had in everything. It's just working out where you can make it. I mean, the smaller, more original office building is interesting. It would be interesting to see if you could split titles on that and maybe do something around a development aspect on there. I'm not sure whether BT occupies any of that building. If they did, you could always offer them a space in the other one and vice versa. I would be inclined to say, right, if you've got this, how about we give you the whole of that building to then get them out, and then you can do some development on the larger one. Could be, again, another play, but it depends on
I think it's a tricky one. But we're quite friendly with the guys at Acutus. I know there's been a lot of interest in this property, and it's definitely selling, but
we looked at this seriously because I did a deal a few years back around an office building in Birmingham, and I took something that was very much similarly based around this, not with the BT issue, and turned the net rent into the gross rent and sold it off in rather good timing. But this one's interesting. I was thinking more along the lines of what Rod had just said there, whereas if you can basically get BT into the original building, you then take this newer, less attractive building, chuck another floor on top, and then go for a full kind of conversion job and see if you can get away with that. But there are so many linchpin restrictions on that, and I think even if BT decides to leave, you're probably only going to get an extra £80,000 or £90,000 a year.
Why would BT leave? Why would they?
It's a massive cost to us.
Because they're paying nothing there. They're paying nothing to be there.
All they're paying
is service charge.
It is very hard to get these big companies to.
They
do
could
anything.
always. They've probably secured themselves because they created the lease because they were from their own. They're probably allowed to sublease it if they don't want it, and then they'll make money off it. I mean, there is no reason why they would leave off their own bat.
That's why I think you've just got to take that on the chin and take that out of the equation. I think there's a big difference where you've got these big companies. I was mentioning to you guys earlier, we're looking at a building where there's some equipment in part of the building, but that's there under a license to Vodafone. And you've got to read the terms. So a long lease is completely different. It's probably unmovable. But in the license, it does say that equipment can be moved and relocated from time to time. So if you look in the detail of the agreement, and it allows you to move them, that's fine. But if there's nothing in there that says they have to oblige, you're not even going to get through to anyone on the phone, which is strange for contacting BT, I guess, isn't it?
Great, well, that's it.
So 2 lots we've had a play with today. I hope you've enjoyed that episode. Tell us what you think of the discussions that we've had. Thanks very much. Piotr, Rod, and Jay, I'll leave their contact details in the description below so you can see what they're all about. And make sure you join us in the next episode of Auction Watch. High streets across the land are changing forever. Basically, there's an oversupply of retail premises. Shops are closing down, more are going to close down in the future. The government know this, and that's why they're introducing a light touch planning system which allows small developers to easily repurpose these buildings to residential use under a light touch planning regime called permitted development. Now, this is going to be the biggest revolution and the biggest change and the biggest opportunity for property investors that I've ever seen. And this is all coming into effect on 1st of August. So you need to know what's happening and what properties to look for to take advantage of these opportunities so that you can get in there and take that first mover advantage. I've got a 90-minute free masterclass to get you ready for August the 1st. Make sure you join me, click the link below. Whether you're a beginner or expert, we'll get you started.